Candle Range Theory Trader back with you with another video just showing the best price action to see for scaling into position. So let's just get into it. Very simple. My favorite price action to see on the 5-minute chart is the swing high and swing low. It's just a simple 3 candlestick pattern that you'll see with a high, higher high, and then a lower high. This is what I look for right here. Okay, or a low, lower low, higher low, swing low, just like that. Okay, can't make it any plainer. So let's go through a couple examples. This is a trend trade. If you don't know what I'm talking about when I say a trend trade, you want to check the links in the description for a more detailed explanation of that. But let's go. So we have here, obviously, the range candle, the money candle, and then the expansion to the upside. So let's see some of the swing lows on the 5-minute chart. Okay, on the 5-minute chart. So right here, this is the first one. 1, 2, 3. See that? Let me go back. See that swing low? 1, 2, 3. 1, 2, 3. When I see that price action, I try to load up on my positions right here. Do 100% of them work? Of course not. Okay, but the main thing is that I look for this low to stay intact, the low of the middle candle to stay intact. All right, here's another one right here. 1, 2, 3. They're not all even. Some of them will be very uneven, but generally like for them to be kind of close together and not so lopsided. But once again, this range here, 1, 2, 3, load up on the positions in this general area. And then here's another one here. 1, 2, 3. You load up in there. And you see, if you notice here, this low of this one here did generally hold. It may get wicked, but you always pay attention to how the candle closes. Here's another one here. 1, 2, 3. Low, lower low, higher low. So you can load up on positions here. And then here's one more. Here's a low, lower low, higher low right here. See, this one's a little lopsided. This candle right here does not have a wick. But, you load up in there best you can, and then price did break out of the range. And this is how it looked when it was done. It just exploded to the upside. These entries were near, see this red line here, near the candle range high. And because you're trading trend, you expect a breakout of this range. So that's where that comes from. Let's take a look at one more. This is from the daily 3x3 trade. If you don't know what I mean when I say that, links are in the description describing that in detail. I'm not going over that right now. This is just for scaling in. So the deal is we're trading predominantly under the candle range low, this area right here. Okay, that's our trading area after these 3 candles to the downside. So our first swing low is right here. We have a low, lower low, higher low. So generally this zone in here, after the swing low has taken place, we load up. We try to get our positions in. Here's another one here, a low, lower low, higher low. Load up right there. To see that level did hold right there. It did come back, but it did hold. So you're not adding, you don't add haphazardly is my point. If you choose to scale in, which you do not have to, but if you choose to scale in, I try to keep my entries close together. Now I understand you're also taking more risk as well, but at the same time, the reward can be greater too. So let's take a look at a trend trade. One more trend trade here for some short examples. We have our 50 EMA trend trade. So if you don't know what that is, again, links are in the description. Our price is below our 50 EMA on the 4-hour chart. So we have our range candle at 5 p.m. Eastern, range candle at 2100, which is 9 p.m. Eastern Standard Time. So then obviously now, we're free to start trading. So at 1 a.m., that's when the trading starts. So let's see if we can see some swing highs. So very volatile price action. But again, you see 1, 2, 3. This is the general area where we try to load up on our positions. You're not going short down here. You're asking for trouble, okay? I can even understand adding in right here. We got 1, 2, 3. That's a swing low, or swing high, but that did get broken, as you can see there. So one main tip, you want your swing highs to be as close to the high of the day as possible or as close to the daily open as possible. Don't look for the swing lows like down here. No. So have some strategy to it. So I can understand down here, but this is where you want to manage risk. So when it doesn't hold, you still have capital left over to get in right here. And if you'd have got in right here, all that would have been yours because here's the high, higher high, lower high. You scale in right there. Here's one more on a daily 3x3 trade. We have our 3 candles up. So then we have our range candle here. So let's take a look at the trading day. And then we just have our swing highs right here. 1, 2, 3. This is near the red line. So right in here, the candle range high is where this trading is taking place. That red candle right here, swing high right there. Near the high of the day. This is the high of the day over here. And then another one here. 1, 2, 3, swing high. I load up best I can there. And then price just spikes down as you can see. So here's one income example. I didn't want to get too deep into this because you have to figure out your own risk management strategy. But let's just say you want to risk $10 per position. So no matter what your stop loss is, if your stop loss gets hit, you'll lose $10 out of your account. So let's just say we have a 3x3 setup on British pound, New Zealand, and we'll do a daily 3x3. So you got, 1, 2, 3 up here, obviously, third candle closing all the way up here. So, you take that. And then so you start to trade on Monday, which is the big red candle right here. This was Friday's action. You want to try to get in on Monday, believing this high will hold. So we had two swing highs here around 1040 or so. So when you take your first entry, you don't go all in. Again, you want to keep the risk small. So let's just say the total planned risk was about $40. So this was about a $10 risk here on the first entry. Let's say price went down and came back up. Then you took another entry, say at 11.05, and then another entry at 11.10, right here. And then as price went down, you took one more at 11.30, and you risked $10 each position. Now, obviously, if price would have come back, you would have lost 40, maybe sometimes more, depending on probably more than 40, to be honest with you, with this last position if price came back. But since it did continue down, this was a 50 pip drop. So each one of these positions would have paid out 1 to 5. So obviously with a 1 to 5 risking $10 per position, 1 to 5, obviously 10 times 5 is 50. So you have 50, 50, 50, 50. So all of those added together, this would have been a $200 pip profit, or I'm sorry, $200 profit with around a $40 to $50, maybe even 60, depends on the retrace risk. So would you risk $40 to make $200 plus? I think that's a pretty good plan. All right. So that's pretty much it. In conclusion, the swing highs and swing lows, they can offer great zones for scaling in. The swing low or high must hold or at least not be broken. So again, just to show you that example of the one that did break, where was it? Yeah, right here. This one here is an example of one that broke. You had a high, higher high, lower high. It chopped around and then it broke. If that happens, if you were short right here, you wait for another one and then you just get right back in because your bias is still short for the day. So you keep trying, keep the losses small, and then when you scale in, you should be able to get back anything that you lose. So that's how you do that. So the closer the swing high and swing low is to the lower high of the day, the better. Remember that risk management is still number one, so you can always get back in if you lose, as long as the losses are, small enough. And remember too that price can spike against you. Be sure you know news, if it's coming up, or if someone may be giving a speech. You never know. And watch your margin as well if you hold these trades overnight, because sometimes the spread can gap up on you depending on who your broker is. I've seen that happen too many times. So just be aware of that. And I definitely wouldn't recommend holding these types of trades over the weekend. So that's it. I appreciate you watching. Definitely subscribe to the channel. Check out the links in the description for more training, and hope you have a great rest of your day.